Yeah. Yeah. So I will write a note here and we will do a question. See, if the overhead absorbed, see, we will discuss this. Under and over absorption of overheads. Under and over absorption of overheads occurs because the predetermined overhead absorption rates are based on estimates, right? So whatever the overheads you are finding out, okay, the overheads which you are finding out, if I tell you predetermined overhead absorption rate, what do you mean by predetermined overhead absorption rate? Budgeted overheads divided by budgeted activity, right? So predetermined overhead absorption rate is equal to budgeted overhead divided by budgeted activity level. Okay, this is what we discussed. Now, so see, what overheads you incur in actuality is what is happening actually, but what you estimate is your estimation, right? So over absorption means what? Overheads charged to cost of sales are greater than the actual overheads incurred. So I will say overheads charged or absorbed overheads. If absorbed overheads charged means what? The overheads which you are like showing under cost of sales. Okay, the expenses what you are showing. Okay, see, what you are showing is your estimate. Whenever you prepare statements or accounts, the expenses you show when you incur rather than you pay, right? But here incurred is okay, some expenses you estimate. So here I'm speaking about the absorbed overheads. I'm speaking about what? Absorbed overheads. So if your absorbed overheads like is more than actual overheads, it is called over absorption. Very simple. That means you have estimated more and you have incurred less. That means your absorption was more, right? That's the reason why it's over absorption. If absorbed overhead is less than actual overhead, it is under absorption. That is insufficient overheads you have like included in the cost of sales, right? Who is this clear? If the absorbed overhead is less than actual overhead, it is under absorption. Very clearly understood. This that means, let's say if the absorbed overheads is like say $1,000 and actual you have incurred like 800, so it is over absorption, right? You have shown 200 extra. Here if it is 800 less than 1000, here you have shown 200 less, under absorption, right? So if you have made a note of this, this is the thing you can see. And actual overhead incurred is always given in the question, and overhead like absorbed you can find out with the formula overhead absorption rate. You can find out the overhead absorption rate with the help of this budgeted overheads by budget activity level. Activity level can be machine hours or labor hours. Okay, and like then you can multiply with the number of units, you can get the overhead absorbed. You can compare these two and then you can decide if this is more than this. Okay, it is over absorption. If it is less than this, it is under absorption, right? Actual incurred is more than overhead absorbed overhead, it is under absorption, because we know this is what is less. But if actual is less than overhead absorbed, it is over absorption, right? So there is a question here. I want you to solve this for simply. You can understand this. The example is very clear and understood, and then activity we will perform. Okay. See, suppose that the budgeted overhead in a production department is 80,000. This is what you budgeted, right? And the budgeted activity is 40,000 labor hours. So you know 80,000 divided by 40,000, what you will be getting? $2. This is the overhead absorption rate. But here the activity level is what? Activity level is, that means this is what is your estimation of number of hours the labor will work. This is the estimation of the production. This is the estimation of the overhead. That means budgeted overhead, right? So budgeted overhead by budgeted activity level will give you overhead absorption rate, right? Now point number 2 is, what matters for us is the actual activity which has been performed. That matters for us. Okay. So what we incurred is 84,000. That is absolutely understood fact. And the activity what we like have to look at, it's like actually how much hours the labor has worked, 45,000, and per hour we are paying $2, 90,000. So this is more than this. That means we are showing more, we have charged more to cost of sales, that is over absorption of overhead, right? Who just have a look through this, we'll move forward. Shall we move forward? Hello.
Yeah, sir.
Okay, okay. So please perform this activity. I'm waiting. So are you doing this? A company uses an overhead absorption rate of this. Overhead absorption rate has been given. Machine hour based on per machine hour. So they use this much dollar per machine hour based on 32,000 budgeted machine hours for the period. So we need not worry about all this data, because overhead absorption rate has been given based upon this activity level. In the same period, the actual overhead incurred is this much. So 78,875 actual overhead incurred. We have to take the absorbed overheads, right? So how many hours the machine has worked? 30,000, right? So overhead absorbed 30,000 actual hours into overhead absorption rate will give you what? 75,000. So you are showing less, you have incurred more, right? It is under absorption, yes, 3,875. So under absorbed by 3,875. Just finish this, we'll move forward. Hoor, if you finish, please inform me. We'll move forward.
Okay, sir.
You're doing this?
Done, sir.
Ledger entries relating to overheads. When an absorption costing system is in use, we now know that the amount of overhead included in the cost of an item is absorbed at predetermined rate. Yeah, see, in absorption costing, we always know that the overhead what we are including in the cost, that means whenever we calculate the cost of an item, of an item in the sense of one unit of something. Suppose if I take pen as an item, if I want to find out the cost of a pen, I will take direct material per pen I'm using, direct labor per manufacturing of pen I'm using. I will also take predetermined overhead rate, right? I will include that in the cost. So in absorption costing, we do that, right? So when an absorption costing system is in use, we now know that the amount of overhead included in the cost of an item. So cost, direct material, direct labor, overheads is absorbed at predetermined overhead rate. Why? Because you are taking the budgeted activity and budgeted overheads, and then you are finding out your predetermined rate. The entry is made in the cash book and the nominal ledger, however, are the actual amounts. See, you should understand one thing. When I speak about cash book works on the concept of receipts and payments. So whenever you receive, you show, whenever you pay, you show. Okay. And same is the case with the nominal ledger. Okay, so they are the actual amounts which you are incurring, actual amounts. So estimations are not shown there, actual amounts are shown. Now you will remember that it is highly unlikely that the actual amount and the predetermined amount will be same. It is very tough that what you estimated is definitely going to be the one which you're going to incur actually. It's very tough, right? You estimated that $1,000 should be the overhead. It will be very rarest of the rare cases whereby the actual amount also what you will be spending will be 1,000. But various times we can expect what you estimated is 1,000 and what you're paying is either 1,200 or either 800. That can be the case. Now, there comes the concept of under and over absorption, right? So to deal this with this in the cost accounting books, therefore we need to have an account to collect under absorption or over absorption of overheads or amounts for each type of overhead. So instead of finding out that in this way, in this statement manner, we are going to make accounts and we are going to see. Okay. So please read this. Marriott's motorcycles absorbs production overheads at the rate of, this is the overhead absorption rate. Okay. Operating hour. Administration overheads at 20% of the production cost of sales. So here it is given production cost of sales. Of that 20% is your administration overheads. Actual data is given to you. So actually you have incurred this much administrative overheads, this much production overheads, this much operating hours, and this much production cost of sales. They're asking you to what entries need to be made for overheads in the ledger. So we'll make the overheads accounts. We'll make production overheads. So these are the overheads given to us, right? So we'll see what are given. Production overheads, administrative overheads, and production cost of sales. And the amounts are this. What is the entry for administrative overheads or administrative expenses? Administrative expenses to cash. Am I right? If because increase in expenses debit and decrease in asset is credit. Do you agree with this, Hoor? Hello.
Yes, sir.
Yeah, this is the journal entry, right? For production overheads, it is production overheads to cash. So in production overheads, when I write to cash in debit, that shows increase in expenditure. I have written debit. Okay. And see, this is the overhead which you have incurred. Am I right? Yes. Now, how much is absorbed? So we will take the like operating hours, and we will multiply with predetermined overhead absorption rate, that is 0.50. So 90,000 into 0.50 will give me 45,000. Now what do you say? This is your absorbed overhead and this is your actually incurred one. This is more than this, right? So it is under absorption, right? How much? 1500. Clear? Hello? Hello? It's nothing but actually incurred is 46,500. The absorbed is 45,000. This is less than this. That means you have charged less to cost of sales. Hence it is under absorption. Now, administrative overheads. What we incurred is 32,000, right? 1,80,000 is the production. Something is given, right? Production cost of sales, and we will multiply 0.50 with that. So just a second, we'll multiply 20% with that. Okay, because 20% is administrative overheads. So the thing is, like, what we have paid or incurred is 32. Okay, and what we absorbed is 36. That means we have incurred less, we charged more, so it is over absorption, 4,000, right? Now what we will do is we will just transfer this under or over absorbed overheads. Okay, we will take them and we will adjust them. See, under absorbed overheads is less expense of 1500. Over absorbed overhead is more expense of 4,000. Okay, over absorption is what you charged more. Okay, you charged more. Under absorption is you charge less, so difference is 2,500. So that is the balance which goes to SOPL account. Okay. So the net is what? The net over absorbed. See, net is like the over absorbed is 2,500, right? More. So this is credit in the statement of profit or loss. More you have, like, charged. So this is what you should be understanding. You have estimated more, okay, and paid less. So who just go through this? I'll show you once again. One thing you should understand: under absorption, over absorption. Over absorption negative value, under absorption positive. Okay. So what happens? One more point I would like to write here. The amount of under absorbed overhead. That means you have charged less, right? Who are you listening? Hello.
Yes,
Hello.
sir.
Yeah. So you understand that you have already charged less, right? The amount of under absorbed overhead. So you have charged less. That means some amount you have charged less. What matters to us is not the estimations. What matters to us is what we have incurred in actuality, right? So when you have charged less, you need to add. When you have charged more, you need to subtract. So The amount of under absorbed overhead is adjusted by adding it back to the cost of production. Okay, and over absorbed overhead is adjusted by deducting it from the cost of production. So here deducting in the sense it is credit, adding in the sense to the expenditure it is debit. Increase in expense is debit, right? Increase in expense is debit and decrease in expense is credit. That's the reason why they are saying credit in the statement of profit or loss. It will decrease the expense. Okay, please make a note of this. Yeah, after finishing this, you should inform me who. I'll move forward. Okay, shall we move forward? Now we are entering into the next topic called marginal costing. So some businesses only want to know the variable cost of units they make regarding fixed cost as period costs. Regarding fixed cost. So see, there is a business, there's a company A, and there's a company B. So what company A does is they only give importance to the variable cost. Okay, and this company B gives importance to the variable cost and the fixed manufacturing costs. Okay, so we will see the differences here. The next topic what we are going to study is marginal costing and absorption costing differences. So marginal costing is one of the methods of finding out the cost, and absorption costing is also one of the methods of finding out the cost of a product, but both the methods have different concepts. Okay, we'll see what kind of differences they have. So marginal costing is an alternative method of costing to absorption costing. So now you understood that there are two methods. One is absorption costing, one is marginal costing. These two are different methods, right? And marginal is alternative method. In marginal costing, only variable costs are charged as a cost of sale and a contribution is calculated. See, they say that only they consider variable cost as product cost, which they are going to sell. And when they remove the variable cost from the sales, they get contribution. So I'll first make a chart and show the differences between these two methods and then tell you what they're saying. So this is variable or marginal costing, absorption costing. What happens in this product cost? Okay, so I will write some things like direct material, direct labor, variable manufacturing overhead, fixed manufacturing overhead, variable selling and administrative overheads, fixed selling and administrative overheads, right? So what we are going to take under product cost in marginal costing and in absorption costing we are going to see. Very simple. So first three things are product cost under marginal costing. Okay, so they are only taking direct material, which is a variable nature cost, variable nature direct cost, variable nature direct cost again is direct labor, and variable nature manufacturing overheads is also a variable nature cost. That means they change with the level of activity, but fixed manufacturing overhead is not considered under variable or marginal costing as product cost. And these three, down three, so 1, 2, 3 are product cost, 4, 5, 6 are, I'll put them in a circle. So this kind of. So 1, 2, 3 are product cost, 4, 5, 6 are period cost. Did you understand? Yes. But in absorption costing, 1, 2, 3, 4. Okay. That's what I'm putting a bracket here. 1, 2, 3, 4. That is material, labor, variable manufacturing overhead and fixed manufacturing overheads. That means they are taking the fixed manufacturing overheads as well. Why? Because they consider full cost. They not only take variable cost, but they take fixed cost as well. But that too, it should be manufacturing cost. So 1, 2, 3, 4 are product cost. This will be taken for like under the product cost category. That means you will be finding out the cost of the product by considering these four costs. And these two costs you will be taking as period cost. That means you'll be showing directly in the statement of profit or loss. 5 and 6. Okay. So I think things are very clear. Shall we move forward? This is the major difference. Nothing more to discuss. Okay. Let's see what they are saying still. So what I've shown there is what you'll be finding here. You can see here in marginal costing, material, labor, variable overheads, right? Used to value inventory under marginal costing, and fixed and production cost used to value inventory under absorption costing. That means you only take material, labor and overheads under marginal costing. Okay, you take material, labor, overheads and fixed overheads under absorption costing. That means all four. There's a format here for marginal costing. Sales less variable cost, you'll get less variable cost of sales. See, cost of sales, you know how to calculate, right? So sales less variable cost of sales, you'll be taking opening inventory, production cost, but only variable production cost, no fixed production cost. Please understand, less inventory, then this is what it goes under the like product cost. Okay. Then these are period cost like variable selling, distribution, administration cost. Then like you get like contribution. What do you get? Contribution. Contribution is also called as profit before interest and tax, PBIT, or operating income. Okay. So again, I'm saying you take under variable cost of sales or like product cost, you have taken the variable production cost. Fixed production cost you haven't taken. Okay, and whatever is a non production cost, that is already under the period cost. So period cost is nothing but you'll be taking under like under the like non-product cost. Okay, that will be taking like under the profit and loss account as normal expense. Okay, so you got contribution, then again less any kind of fixed cost. Okay, related to anything. This is marginal costing, I'm telling you. So related to anything. So I told you, I have already given the examples. You are going to take variable cost like material, labor, and variable manufacturing overheads. So variable manufacturing overheads or production cost has already been taken. Fixed manufacturing overheads, variable selling and administrative expenses, fixed selling and administrative expenses. So variable administrative and selling expenses are also what? Period cost. Okay. And fixed, whether it is like manufacturing overhead, that's what they have given, production, whether it is selling and distribution overhead, whether it is like anything, okay, will also be taken as period cost. Who are you understanding and following? Please tell me you get net profit. Hello.
Yes, sir, I'm following.
Yeah, only variable, only what would have been taken? Direct material, direct labor, and variable manufacturing cost has been taken as product cost. Rest all, whether it is variable administrative selling and distribution expenses or fixed, whether it is fixed manufacturing overhead or administrative and selling expenses, all are period cost. Okay, then you get net profit. So the format is very clear. The differences has been given to you. You need to do a question here. So will you solve this? Illustration 6, we will do this. And contribution I already explained you. Sales minus variable cost is contribution. And here under variable cost, what we are taking? Variable production cost. See, contribution you will get when you will be subtracting all the variable cost from sales. All the variable cost. Okay. Now don't take it like, sir, the statement was something. No, don't consider it in statement wide. Okay. Here the contribution what we have taken, because statement can be somewhat lengthy thing to understand, but when you see the statement also clearly, you have taken sales. From that you removed variable cost of sales, right? You removed variable manufacturing cost, you removed variable selling and distribution cost. So sales minus variable cost of sales less variable manufacturing overheads, variable selling and distribution overheads. When you removed all the types of variable cost from sales, that is total variable cost, you got what? Contribution. Sorry. Sales minus total variable cost. The end result is contribution, right? The same thing they are giving here. So this concept is also almost done. Contribution concept. Okay. We'll do a question right now. Come on. So this is the question. Good Time Company manufactures cheap watches. Okay. Which it sells to wholesalers for $25. Cost card is given to you. These are all the variable expenses, material, labor, and variable production overheads. So this is a selling price, right? $25 is selling price, revenue. Variable, there is a variable selling cost per unit of 0.50, which you have to multiply with the number of units. Okay. So additional information, budgeted production, actual sales, actual fixed production overheads, actual fixed selling costs. Actual matters, right? So now what we'll do, we will take the actual sales. What is the actual sales? 13,000 units, right? Hello. Hello. What is the actual sales? It is 13,000 year 1, 12,500 year 2. So we will take this one. This amount is 13,000 into selling price. This is 12,500 into selling price. Please calculate. Then comes the cost of sales. Cost of sales is opening inventory. So what was the opening inventory you had? So opening in, there is no opening inventory, all variable cost. So opening inventory we don't have, it seems. There is no opening inventory, all variable cost were as per budget for, okay, there's no opening inventory here. Okay. Now production costs, we are doing marginal costing, right? So we will take the variable production cost. So actual production is 14,000. Okay, so we'll take 14,000 into what is the production cost given to us per unit, 20, which considers everything, material, labor and variable production overheads. We already have discussed that under marginal costing, variable manufacturing overheads should be considered. Fixed manufacturing overheads should never be considered. So under the product cost, variable manufacturing overhead is a part, right? That's the reason why we have taken 20 and we are multiplying, we got 2,80,000, right? And then 11,500 I think for year 2. Actual fixed production, actual production, right? So we have taken 11,500 and 20. This is what is the second year, right? Now don't worry about this, I will tell you what this 20 is. Okay, now see how many units they are selling, right? They are selling 13,000, correct, Hoor? But how much they produced? 14,000. From 14, if you sell 13, 1,000 is left over, right? So 1,000 is the closing inventory. Closing inventory always on cost, 20. So 1,000 into 20, 20,000. This closing inventory of the first year becomes the opening inventory of the second year. So you should not be confused. That's the reason why here we have opening inventory. This we calculated, this we calculated. Closing inventory, opening inventory. Okay. And as per the marginal costing, we have like calculated earlier, then we'll be removing the variable selling cost. So 13,000 units we have sold into 0.50. So we'll multiply and 12,500 into 0.50. So it will be exactly half. 6,500 and 6,250. 12,500 into 0.50. And then when we calculate everything from the beginning, we add less and whatever, like we do this 325 minus 260, we got 65 minus 65, and we got 58,500, and there also we got this. Then sales minus variable cost, any type of variable cost is contribution. So what variable cost we have taken? We have taken variable selling costs. Okay, we have taken variable production costs. And you should be again understanding only the product cost will be having material, direct labor and production overheads. I'm telling you, okay, or manufacturing overheads. That is what here it is given. And that to which kind of production overheads? Direct production, direct production. Okay. Variable production overheads. Variable production overheads. Under marginal costing, variable production overheads is what is matters. That's the reason why we have taken that 20. Under that we have already considered. And from sales, when we removed all the variable cost like production, variable production cost, variable selling cost, okay, we got contribution. Okay, from that if you remove the fixed cost like production and selling, so we will see that also. So these are the fixed ones, they won't change if the activity level is high or less, they are always fixed. We get net profit. Okay, so this is what is the activity who you need to perform this at home. Contribution topic is also done. Tomorrow we'll start from activity 5, marginal costing profit, and also we'll go for the absorption costing. That will be the final part of the chapter. Next class, whatever, I will finish this chapter. Okay. Let's see the tally. It will be done next. We'll start with, okay, then we'll see from here. Done, 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 done. This we will take. We will finish this chapter then. This will be done. This is done. Then only 1, 2, 3, 4 will be left over. We will finish that. Okay. Okay, who then? We'll take the class tomorrow evening. Thank you.
Okay, sir.
Thank you. Thank you.